Good morning, everyone, and welcome to our webinar, The Power of Short-Term Care Insurance with AIM's Derek Lape. Today's webinar will be recorded and then later posted on our website. This does mean that all attendees will be automatically muted so that we get a quality recording. If you have any questions, go ahead and type them into the chat box, and we'll try to answer them throughout the presentation. But if we're unable to get to all the questions, we'll have a member of our marketing team reach out to you individually to make sure you get that answered. Before we get started, we'd like to invite you to join us for our next webinar on Tuesday, September 30th at 9 a.m. Pacific Time. Join AIM's Don Erickson and Cigna's Doug Bratt for Increase Your Income with Cigna in 2025 by registering at yaim.com/training. And with that, I'll hand it over to Derek so that we can go ahead and get started. Take it away, Derek.
Perfect. Thank you, Jordan, and good morning to everybody, or afternoon, whatever time it is where you're joining us from. So we'll go ahead and jump into this. Obviously, you are all here to talk about short-term care, extended care, whatever you guys want to call it, right? And we're going to go through a little bit kind of more high-level view, getting into it. If you guys do have questions, like Jordan said, type them in the chat. We'll go ahead and answer them here if they're a bit more general, or kind of just all-encompassing. If they're more specific, I can answer them when I do the follow-up calls for you guys, or feel free to email them in or give us a call. All right, so basically what we're doing here today, a little bit of why we're here, right? Obviously short-term care. We're going to go through some of the client mindset, where does short-term care really fit as far as clients, kind of the market you're looking for. Some of the ways to kind of offer some of these solutions a little bit, not too into the weeds, but just a little bit of strategy that helps with a lot of people and kind of who you should be looking for, especially if you're not really doing short-term care. This is your first time into it. And then obviously where to go from there. All right. So the easiest answer for this kind of question or statement is obviously critical care, the need for it, or even long-term care as far as the policy goes, hasn't gone away, right? With all these baby boomers, aging into 65 plus, and the cost of care, more and more and more people need it, right? It's pretty close to a guarantee that you can get besides, death, as far as types of insurance you can get. Most people, the majority of them, are going to need some kind of extended care at some point in their life, especially as they get older, they live longer. Kind of like cars, our bodies just start to break down, right? And there are things we need, and medicine, even with all the cool advances coming out, and it looks like they may be able to reverse Alzheimer's and cure blind people and reattach spines and all this stuff, is still a lot in the beta stages. They're still testing it out. It hasn't really hit mass medicine as far as options that are available to the general public. Maybe 10 years down the road, 20, however many, all that could be gone. But as of right now, there is a huge number of people that need some kind of extended care plan, or they're, excuse me, or they're going to be paying for it out of their pocket. Right. So obviously, we have the demand for it, right? However, it is getting harder and harder for people to get into long-term care, traditional. The hybrids are a little bit easier to get into. They're not as stringent underwriting, but they still do have fairly stringent underwriting as far as what they're having people get through to get into it, right? So it's going to be something that's a lot easier to place people in. And the other big hurdle this helps people clear is affordability. It is a lot cheaper than getting a standalone, a traditional long-term care plan, right? Part of that is because the benefit's not as big, it's not as long, right? But it gives them something. We'll dive into that a little bit more here in a minute, but just kind of the first teaser for what's coming up, right, is it clears two of the biggest hurdles, right? It's easier to get people through underwriting, and it's cheaper. So it's going to be an option for a lot of people that, long-term care isn't going to be a solution for. And then also, a lot of people don't even really know about short-term care, extended care. They don't know it's there. They don't know it's an option. Long-term care has been pushed for so long, especially during the golden ages. Everybody's heard about it. Most people have had family members somewhere that have had it and they've seen what it could do. They've also seen the flip side of people who've had no extended care kind of policy to be able to take care of things and what that can do to them financially. Short-term care is something that's been around for a while, but it hasn't been as heavily pushed until recently. Part of that is obviously those two big hurdles I talked about that are kind of holding back long-term care right now, right? Price and the ability to actually qualify for it. Short-term care has become a lot more of an option, a go-to for a lot of people, or at the very least, it's something they pivot to after they get a decline, after they get somebody who doesn't pass pre-qual, or they just look at, the medical conditions and know there's no way you're going to qualify for anything else, right? So it's becoming a lot more of an option for a lot of agents and clients, which is perfect. All right, I'm just going to get all these up here for us. That way you guys have some time to read them. Sorry about that. All right, so part of what we're looking for here as far as who you want to kind of present this solution to is really going to be the same people you're looking at for long-term care, right? That golden age is going to be 50 to 75. That's when most people are looking at it. It doesn't mean you can't go younger. It doesn't mean you can't go older. You just kind of get out of that, Goldilocks, it's just right stage, right? Where the price is amazing. If you go any higher than 75, it starts to get a little bit more expensive, but it's definitely still affordable. If you go below 50, price is great, but they may not necessarily see the need, and there's probably some better options to do for them, some kind of hybrid, something like that, right? Where they're building some cash value as well. One thing that's with this as you're going through, especially as you're pivoting over, you will notice there still is a lot of procrastination, right? We as humans think everything else we have going on is the most important thing in the world, and we are going to put a lot of times towards other stuff, and they're going to kind of fade in and out. So that's where you get to come in and kind of just really guide them, ask them about the plan, see what they have in place, and kind of just sell the benefits of it, and we'll get into those too. But the nice thing with this is a lot of clients in today's world where we are so overwhelmed with, unlimited information, whether it's correct or not, and ads everywhere, and TV and social media, and it doesn't matter what age you are, right? It's getting more and more, even more and more baby boomers are being on social media, right? They're getting on there multiple times a day. They're using smartphones now so they can communicate with family members, grandchildren, whatever the case is, right? But with all this technology, clients really value control and they start to really value simplicity, right? And there's not really anything out there, at least in that critical care realm, that offers more simplicity than short-term care, right? Or extended care. It is very simple. It is very easy to explain. They understand it. Depending on what carrier and policy they go with, there's a fair amount of control as far as options and riders that they can kind of put in there or not put in there to really tailor, one, their coverage to the needs that they have, and two, to really fit what they're looking for as far as price for the premiums. So it's really a win-win for kind of that modern client in that, age range that we're really going after, right? And then the other part of this is it really speaks to those who have recently retired or been retired, right? They're on fixed budgets. They only have a limited amount of spending power that is already allocated towards something. In a lot of cases, this is a perfect fit. Like we just said, however many times, it is going to be a very inexpensive option for them to be able to help offset some of those costs instead of just coming straight out of their pocket. All right. So one thing you're going to run into, and you're going to run into this with life insurance, long-term care, short-term care, right? Just a lot of different areas of insurance, is you're going to get those people that say, I can self-insure. In this case, it's going to be a little bit more so the benefit amounts aren't insanely high, right? You're not going to be talking about getting, $500,000 over 5 years or whatever the case is, right? This is short-term care. It's only going to go for at max a year or just under. Benefits are going to be a lot smaller. We'll jump into that. But when they look at it, they're going to be like, oh, well, I can just fund that, right? It's not really covering much. Well, a lot of times they're going to say they can just self-insure, right? And this is a really good thing to get in your head is this kind of chart of self-insuring versus self-funding and smart planning, right? A lot of people think self-insuring is just kind of paying for it out of pocket as the costs come up. That's actually self-funding, right? Self-insuring would be taking a chunk of money, putting it in, like a high yield savings account, not touching it and just leaving it there, right? For when they need it. Self-funding is when things pop up down the road, they're going to cut into their 401k, they're going to cut into their investments, they're going to cut into their savings, their income, whatever that's coming from, and pay for it then. Both these carry pretty high risks, right? You have inflation, you have the purchasing power of the dollar dropping over time, you have all kinds of things going on. Maybe something comes up and they have to spend that money beforehand. A lot of risks in it, right? Versus a smart planning is you're buying some kind of policy and transferring that risk to the insurance company. And a lot of times when you're doing this, whether it's long-term care, short-term care, right, you're getting $3 to $4 for every dollar you put in, right? So you're also boosting your purchasing power without even having inflation on it, right? It's going to kind of help offset what's happening to the dollar and the devaluation of money over time and all that stuff because you're tripling your dollar right off the bat, right? And that's kind of just a general number, but it gives you an idea of kind of how this helps out. One thing I do say to people who say they can self-insure or self-fund is, yeah, you can, but why would you, right? Even if they are very, wealthy and well off, they didn't get there by spending money they don't have to spend on things that aren't going to actually give them some kind of return on their investment, right? They got there by saving, working hard, whatever the case is, right? So why take your money and put it somewhere where you're going to have less purchasing power for it down the road, right? It just doesn't make sense, right? So there's that side to it. And also, like we talked about, there is a really, really good chance they are going to need this at some point in their life. So it's not really a gamble, right? It's more of a when question than if. So those are going to be things that really kind of help switch the way you're looking at this and approaching it for when you're pitching it to those clients. Right. So some of you might be brand new to this, don't even know what short-term care is. You may hear people say extended care. Really, it's the same thing. Extended care is kind of a new term we're using to coin short-term care. It sounds better. It sounds a little bit fancier. It sounds a little bit more inclusive. Really, I like to think of short-term care, extended care, whatever you want to call it, as more of a recovery insurance, right? Because really, you're getting 360 days or less. It's going to be something for, with how good medicine and stuff is getting, an opportunity to recover, let's say, from a stroke or from, something that you have to go get care for a while, and hopefully you're going to get better from. It's not going to be the true kind of end all solution that traditional long-term care is, where you can have it for 3 to 5 years. Some of the hybrids have continuation of benefits for lifetimes, right? So you can have it 20, 30 years, right? But it's not going to be necessarily like that long-term care where you're hopefully going to have it, and this is unfortunate, but until the day you pass away, right? It's going to take care of a lot of those costs and get you there. This is going to be more of that kind of smaller, I need to recover from something plan, or people who can't get long-term care, right? So it's going to help them offset some of those costs, at least for the first year, that they would be paying straight out of pocket, right? So, and there is a possibility, right? If they have something bad enough, and it's unfortunate, but they may not use this past a year, right? Even the average long-term care usage right now for claims is about 3 years. So with average, some of that's lower, some of it's higher, right? But it's something where it gets them at least a third of the way, and you're really looking at a lot cheaper premium, which is kind of nice. So depending on what kind of short-term care plan you get, right? There's short-term home health care. There's more of, for instance, GTL's Recover Cash, which gives you a little bit more almost long-term care light policy, or it's still only going to go up to that, just under a year, but it's going to have a little bit bigger benefits. You can put some kind of inflation rider on it to help grow the cash value. You can mix and match different benefit pools for whether it's home health care or facility care, right? There's a lot of things you can do on it, similar to a long-term care, which makes it pretty attractive. The flip side to that is when you're looking at more of just those home health care policy types, very, very simple underwriting. You're looking at like 3 to 5 questions. Realistically, it's pretty much one question, right? Are you getting A now, or do you have some kind of cognitive issue, right? So basically, are you getting care, or do you need it now, right? Pretty simple kind of thing to get through that. Very, very easy. It's not guaranteed issue, but it is as close as you can get for that simplistic underwriting style. Versus once you start stepping into those other ones that have the facility, that have the home health care, that have a lot of the little fun options and riders, you're getting a little bit more underwriting in it. It's still not going to be even close to what you're looking at for long-term care. It's not going to be as stringent as even the hybrids, right? Whether it's annuity or life, but it's going to be more than when you're looking at just that home health care side, where it's really easy to get people through. As far as benefits, right, and I didn't want to go just with one carrier here. Most of them you're looking 90 to 360 days. It's going to vary a little bit state by state and carrier to carrier. You're looking about $100 to $300 a day. That can be both on the home healthcare side as well as the facility side, depending on kind of what policy you're looking at with what carrier. And you're getting very simple underwriting as well as really fast approvals, right? I mean, it's some of the carriers take as little as 2 or 3 days to get stuff issued. And if you've been in the long-term care arena, we're talking months possibly, right? So it can take a while to get through the other stuff. This one's very quick, very easy. We do have some agents that will do this and a long-term care kind of at the same time when they're not sure about what's going to happen with the long-term care policy. So just a lot of good options. As far as really who your demographic is, who you're trying to sell to, we kind of talked about that golden age already, that range, 50 to 75. That's going to kind of be the bread and butter, easiest to both understand the benefits of the policy as well as get that good price on it. One thing you will see, and you don't have to do it this way, but a lot of people who do short-term care will use it as a pivot, kind of like I was saying. So they will go to it when they know someone's not going to qualify for something else. If the premium cost becomes kind of prohibitive on other options, this is a good thing to pivot to. And some people sell just short-term care, right? So there's no one way to do it. You can kind of mix and match what fits best for you. It's definitely a tool or arrow in your quiver that I would recommend that you have, whatever you're selling, right? Even if you're just in the Medicare arena with med subs and stuff like that, it is perfect because a lot of those clients you're talking to who are aging in, who have been in, are in that demographic that everyone wants as far as age range to sell short-term care to. So it's a very easy pivot. A lot of times you're going to know a good chunk of their medical, right, history. You're going to know what they're going to qualify for. It makes it really easy to kind of be like, hey, what do you have in place, if anything, right? I wouldn't say it just like that, but it gives you that kind of ability to, when you're doing reviews and stuff like that, annual, semi-annual, to kind of check to see what other coverages they have. Very simple product to learn, very simple to sell, like we talked about, pretty inexpensive. And then it just gives you a little bit more of that stickability or retainability for your clients to stay with you, because then they have more policies with you, which inherently makes them stick with you longer or forever, hopefully. Okay. So pretty straightforward. Quite honestly, the clientele is going to look very similar to long-term care. So if you've been doing that, they're going to look almost identical. Big piece of it, though, like I said, is going to be that premium kind of being the differentiator. So if they're looking at that long-term care price, like, oh boy, or if they're just not super healthy as far as being able to pass a long-term care, and that's something that's not too hard to not qualify for long-term care. Sorry for the double negative, but myself, I am 39. I played football in college for a little bit. I was in the Army, martial arts my whole life. I don't qualify for any long-term cares out there, right? At the age of 39. So just imagine when you're talking to people 50, 60, 65, 70, right, with all those years of wear and tear, it just makes it that much easier for them to not qualify. So short-term care is a great option. Unfortunately, I live in Washington, where we don't have any short-term care available. So, but who knows if I move down the road. So a lot of these we went through, right? The last part on this is kind of what we've been alluding to this whole time, is really it's a realistic middle ground option. Like I said, I like to think of it as more of a recovery policy, right? It's not going to be that full cost for hopefully the whole time you're in there. It could be if it's something smaller, like we talked about, and you're going to recover within a year. But really, what it does is it gives people at least hopefully a year, right? Just under, of being able to offset some of those costs, to move around assets, to figure things out, right? Because maybe they're going into a home, they need to get the care. This gives them, depending on the actual benefit they select, but hopefully a year to maybe sell their house, right? That they're not going to need if they're going to be in, let's say, facility care for longer than a year, right? And get those funds, instead of having to rely on family members or other things to shell out money to pay for that year until they can sell the house. And then when they do sell the house, those funds are just going to go towards paying off their family members, right? It just gives them more flexibility, options, and time is the kind of best way to think of it, right? To where they don't have to feel like they're going to be a burden, to where they don't feel like, that they don't have anything in place for them. It just makes things a lot simpler and easy for them to actually plan and have something already in place that they planned on. So it's a really good middle ground as far as premium's great, and it does give them some coverage. Okay. So we went through some of the daily benefits. It's up here again. Some of the benefit periods. Elimination periods are going to vary once again based off of the carrier, the actual policy you select. A lot of them have different options. So just like long-term care, for the ones that do have options, the shorter the elimination period, the more the premium is going to go up. Pretty simple, right? Because the insurance company is going to pay out sooner. So all that's pretty straightforward as far as what you're going to be seeing. Some of them are going to have a lot more riders than others, right? And I'm not going to read all these, but there's some cool options, such as caregiver training, stuff like that, inflation protection, right? There's a lot of, let's say, magic, right? There's a lot of magic that happens in some of these riders for these short-term care policies, right? Just like everything else in the world, not all short-term care policies are created equal. You have some real flexibility in some of them to really build some amazing, features and riders into them with some really healthy benefits over that year. And then you also have the ability to scale back and get something really bare bones that's going to really meet someone who might be on a really tight budget, but still help address some of those needs that they have at the price they can pay. So a lot of different ways to go. If you're not familiar or if you're curious, right, this is something we can get into over the phone call or a call in. and we can actually get into more carrier specific and what's really, working in your area, what's going to give you the best chance to sell this. But pretty simplistic, which is nice. That's one of the things agents love about selling these is it's not hard. There's not tons of stuff you have to learn, right? Either way, it's pretty simple. Right. So what we got here is part of kind of what I was talking about. So with this, as far as the builds, I really just kind of looked at, 5K a month for 3 years on the long-term care side. Obviously, you see the ages here. Got a little bit of inflation on it, right? Around 3%. And then on the short-term care side, I kind of just did really, really healthy budgets, matching, what's paying out the same. Obviously, this is only going to be for just under a year, so 360 days. But it gives you an example of the price differences, right? So when you're talking to a 50-year-old or 65-year-old couple, instead of throwing out $451 a month or 625, you're talking 60 to 100 or 90 to 170, right? Huge, huge price difference. It's a lot easier to sell that, right? Because what you're kind of seeing on the short-term care side is it's about a quarter to a third of the price, and they are getting about a third of the coverage, right? It's not going to go for those extra 2 years. But in some cases, it's a quarter of the price, right? So it's a really good value still for what they're getting. Uh, Excuse me, sorry, I had a cough. All right. So great option, great coverages, giving them some healthy benefits for that year, like we talked about, either time to, if it's something minor, recover and get out and not have to blow through their savings or investments or whatever they had, or maybe they didn't qualify for long-term care. This gives them a year to figure stuff out and get rid of some of those assets to be able to pay step four things, their care the next 2, 3, 4 years, however long they're in there, right? So a lot of good options for them. Right. So as I mentioned, I do like to kind of phrase it as that recovery side. Um, Whether you want to call it short-term care, critical care, it doesn't really matter, right? Really, what it's going to come down to is what clicks and resonates with the client you're talking to. You're probably going to know them better than me because you've actually talked to them. And also, you want it to feel natural to yourself. So, however you phrase it, totally fine. But really, it's pretty simple. It's based off of recovering for a short period of time, and it's a lot of times the most common kind, especially with how good medicine keeps getting. A lot of things that used to get people stuck in a facility care or home care for 3, 4, 5, 6 years is luckily getting less and less and less, right? Like I said, we're not really to all these promised things that are in beta testing, but it's coming. So there's a good chance, especially if you're talking to people in their 50s, right, that the whole landscape is going to drastically change in the next 10 years, right? A lot of things that made this a for sure thing might be curable or, very, very manageable in the near future. Obviously, you don't want to count on that, right? But this is a good thing to help kind of go with that, especially if they can't afford or qualify for long-term care. Another important thing to point out is this isn't going to replace long-term care. This is kind of more of a plan B. It's filling the gap. Like I said, you're not going to get the longevity of a benefit that you would get from a true traditional standalone long-term care or even some of the hybrids out there. You are going to be just under a year, right, as far as the longevity of the benefit. But for those who can't get or afford other stuff, this is a good way to help fill that gap. And also, like we talked about a little bit, it's perfect for people who are, on med subs, who have annuities, really just in the right age range. It's kind of a natural add-on or extra or pivot to or, whatever, right? Salvage a long-term care policy that you can't place. So it's really good to have this as an option to offer when you need it, even if it's not just the main thing you're pushing. So some of this we touched on a little bit, right? Why are agents selling short-term care? Well, we talked about it. There's still a huge demand for people who need some type of critical care, right? It's not going away, or at least it hasn't yet. The majority of stuff is still there that is going to make them need it. You just get wear and tear on your body as you get older. There's lots of things that can happen. Huge demand, and it's only getting bigger now. I mean, we're still having record numbers of people turning 65 every day until we hit, I think it's 2030, right? So huge, huge demand, very big market for those, who want to sell it. The commissions are pretty good, right? Not talking huge premium amounts, but they pay well, right? And the more you get, and with how many people need it, it starts to really stack and add up. Agents also love how simple it is, right? The underwriting's quick, the issues quick. Declines are extremely rare, right? Because if you're going for that kind of home healthcare side, you almost have no questions. On the health side, like I said, it's pretty much, do you have cognitive or are you getting aid now? Is really what it boils down to. Or very, very limited questions, right? So there's very few declines. I don't think I've seen a decline in the 3 years I've been here for any of my agents that have put anything through. Now, obviously, part of that's going to come down to some pre-qual underwriting on your side, making sure you're just not pushing everything through, right? If someone is on claim or receiving critical care, you probably don't want to put that through, right? Because that will be a decline. But very, very simple versus, even long-term care. Sometimes it's honestly kind of a crapshoot, right? You don't know if it's going to be a decline or not. I've had times where I put stuff through that nothing was specifically listed on, the uninsurable list, but they had enough things that just added up to where it was a decline. So this is much more simple. The premiums are very low as far as getting people to buy in and seeing value in it. It's just something that really should be part of your standard conversation, no matter what your focus is, because it is so easy to sell. It meets a lot of need out there. You're actually taking care of your clients, right? You're not just stacking stuff on there that they don't need. So it's a little bit of the best of both worlds. All right. So kind of where do we go with this high level overview that we just ran through with you guys? Well, one, if you're not selling short-term care, if you don't have any carriers, I would definitely talk to me when I call in and talk to your marketer, email them, whatever the case is, see what they recommend for your area. If you have any cases, right, any clients that you're kind of curious of, like, oh, this might be a good fit for Mr. and Mrs. Smith, right, ask us. And we can kind of get you set up with the right plan, the right amounts, different things like that, as far as what's really going to meet their needs and how to better approach that conversation. One thing I want to point out is short-term care isn't just a product. It's a conversation starter, right? It's a differentiator. It helps you retain, your clients, because it's something that not everybody is offering. And there have been many agents who we've had get declines on long-term care, and for them that's the end of it, right? They just kind of let that go and on to the next. We have agents who don't do short-term care at all, or even talk about it, or long-term care, right? They're just in med sub. And as we talked about, there's a huge demand and a huge demographic of people that need this. So for those who are talking about it, one, it's a huge opportunity, but two, it makes you stand out a little bit, right? And maybe you're talking to someone and asking about long-term care, and they're like, "Oh, I didn't qualify, right, with my other agent or other carrier or whatever." You can ask them about short-term care, right? Because there's a good chance that their agent may not have, right? It's a growing industry. It's getting bigger. It is jumping up like crazy, but it's still not as well talked about as it really should be. So keeping that in mind is really going to be helpful. And thinking about clients you've recently helped who might be a good fit, kind of helping them fill some of those gaps in what they have. And then getting some kind of appointment scheduled, talk to us first, or if you're already doing this and you've been contracted, but just kind of have it sitting there, or whatever the case is, start reaching out to them. Talk about getting a review session, whatever the case is, about what they currently have set up and just seeing what they have in place, right? With us being their trusted agent or, whether that's insurance or financial advisor, that's part of our job is to look for those gaps to make sure they're taken care of, right? So go ahead and get those going. And like I said, we're here to make sure you have the best options as far as carriers, you know what you're talking about. And this isn't something that's going to take a lot of time to learn. It's not like trying to figure out how to build IULs and turn them into almost an annuity or a college savings plan, right? This is very simplistic. Even the ones that have a lot of options, very simple, especially when it comes to the apps and stuff like that. Very straightforward, easy to do. So definitely something I'd recommend kind of putting in your quiver, having there to differentiate yourself. I do want to say thank you to everybody for being here. As I mentioned, this was a bit more of a high level overview. We can get into more of the specifics, the weeds, kind of when I call to do follow up questions. Or if you don't want to wait, just go ahead and call into the office. The 800 numbers right there. You can ask for me or the marketer you've been working with, right? Or shoot us an email, right? We're always here to help out, to answer whatever questions you have and jump through everything. And really, we're not going to be successful unless we make sure you guys are, right? That's why we're in a partnership together. So use us, right? Let us help you get everything set up and figured out and make sure all this is working for you. But with that, I just want to say thank you to everybody for being here, and I will be reaching out shortly. Thank you.